Good morning, you're watching One News Now Markets. I'm Danny Laurel. Now, before we delve into the equity space, here are the top stories of the hour. The Trade Department reports that about 239 billion pesos worth of investment projects are now in the implementation stage. Trade Secretary Fred Pascual said President Bongbong Marcos directed him to ensure that the pledges are followed through. Marcos Jr. had earlier said that his foreign trips has so far generated more than 3 trillion pesos in investment pledges. And as of February 9th, the DTI Board of Investments has approved more than 414 billion pesos in total investment projects. The government is considering offering dollar-denominated retail treasury bonds in the second quarter. Finance Secretary Ben Diokno says there is a lot of interest for dollar bonds from London and Frankfurt and even from Japan. The administration's economic team earlier held briefings and pitches in these cities. However, there is no volume for the proposed offering. Back in December, Diokno said the government was targeting to offer retail dollar bonds within the first 3 months of the year with an expected volume of $3 billion. However, this was pushed back after the government raised 162 billion pesos from an RTB sale this month. The Philippines' last dollar bond sale was held in 2021 where it raised $1.6 billion. The tightening cycle will likely continue, but the size of next month's rate hike could be smaller. Bangko Sentral Governor Felipe Medalla says it is, quote, most likely that the Monetary Board will increase rates by 25 basis points off the back of signs of slower inflation in February. Medalla says there is a great possibility that inflation has already peaked in January as non-monetary measures are starting to dampen the price hikes. Inflation zoomed to a fresh 14-year high of 8.7% in January, prompting the Bangko Sentral to raise rates by another 50 basis points. This brought the key interest rate to a near 16-year high of 6%. Coming back from a surprise trading holiday last Friday, and there is no shortage of activity on the local bourse today. Here to chat with us, we have Royce Aguilar of First Metro Securities. Good morning, Royce, and welcome back.
Good morning, Danny. Good morning, everyone.
All right, so just kicking off the markets report with how we're opening today. I'm just gonna call on my Bloomberg terminal here if I can see it. All right, there you have it, 66.38 this morning, so down a little bit by 0.7%. Give us an idea of whether you see a support level here happening after digesting all of this, Fed moves, language of inflation, and the language of the central bank governor.
Yeah, so to answer your question, we're looking at the support of 6,600.
Okay.
And I think it's definitely a level that can easily be broken into.
Down.
Well, if you take a look
Okay.
if you take a look at the risk right now, it's still there, and there's still a lot of uncertainties in the market. And initially, a lot were expecting that bond yields will peak, but right now, given that inflation remains to be elevated, investors can still park their funds in fixed income instead of equities. But for us, there's always opportunities in the equities market. But in terms of expectation of since last year, prior to the Ukraine-Russia war, the expectation is economic reopening, go for equities. But right now, it's a bit more complicated than that. So those are the things that has been affecting sentiment in the equities market. So, yeah.
What would the markets appreciate in terms of rates? Would they appreciate another rate hike above 6%, a 50 basis point rate hike? Give us an idea of what we need right now to, let's say, quell the sell-off or to keep that support level.
I think they're looking at inflation, definitely, because of course interest rates will rate hike or rate cut will be dependent on the inflation data, and that's what investors will continue to look at. And I think going to the interest rate cycle, I think what if investors appreciate is the clear language of the path where the central bank will go. And of course, the recent news that we just saw, Governor Medalla saying that 25 bips in March, so that's good. I mean, there's language, so investors will anticipate that. No, not much surprise. So at least for the BSP's part, we're okay with it. It's just that inflation is still the data that continue to watch out for. And looking at even in the US, their inflation data there, it continues to exceed expectation. So for investors, definitely that's enough reason to stay on the side.
Okay, have we priced in already the statements that, or the revisions of the economic managers that we're looking at above 6% inflation this year? Or do you still see some risks to the upside or downside risks here? What is your house view on inflation? Has it peaked in January?
Okay, so good question. In terms of has the increase in target been priced in, I think that was priced in last week, in the past couple of weeks,
Okay,
where we actually underperformed as compared to the other region. So yeah, that's a good question. But in terms of our forecast, right now it's around 5.8%, but definitely we continue to observe inflation data as months go by, and there could still be upside, definitely, depending on the monthly inflation, and that of course has not been priced in by the market. So hopefully not much upside surprise moving forward.
Okay, let's go through some of the corporate news here. No, so this is actually from Bloomberg with no real confirmation from the company, but they're saying that SM Prime is said to be reviving a $1 billion $1 billion REIT IPO. They've started now talks with advisors. It could happen as soon as fourth quarter this year. Let's kick off with a question. Is this a good time for REITs? Okay, we seem to have lost Royce there for a moment. We'll try to be back.
Well, for us,
oh, there you go.
So
Royce.
at the start of the year, our expectation is inflation. Hello, yes.
Yes, go ahead. We lost you for a minute.
Hello.
Yes, go ahead.
Yeah, so sorry. That, but in terms of REITs, at the start of the year, since inflation will peak, interest rates will peak, bonds will peak. That's the story where REITs are attractive. So I think right now, REITs are, something to put on our watch list. And if their IPO is around fourth, they could consider, definitely.
Okay, but let's take a step back and take a look at how the REIT space has actually performed since the IPOs. You see, I mean, when I look at it, it hasn't necessarily gone back to the IPO levels of the REITs. Why is that? Especially if you're saying that the interest rates should be higher, we should be pretty happy, no?
Right. Yeah. Well, that's a good question because right now, inflation has yet to peak. So interest rates, at the mind of investor, interest rates have yet to peak and bond yields have yet to peak. Of course, for us, looking forward, there will definitely be a peak. So that's why we tell our clients, put REITs on your watch list, but don't be aggressive yet.
Okay.
Because interest rates have yet to peak. But definitely put on your watch list because at the end of the day, a lot of names have quality properties and quality data in terms of occupancy rates. But of course, we don't like all the REITs. We have to remain picky, and hopefully, SM Prime, the timing at the end of this year, the economic data will align with the REITs. So yeah, it's definitely good to consider as early as now. But of course, IPO as early as now, not yet. But fourth quarter may be a better timing. Sorry.
What advantage would SM Prime as a stock have with a 1 billion REIT IPO where they're basically giving more ownership to the public? What can they possibly use these proceeds for at this point, and how would that move the stock?
I think it's mostly for REITs. For REITs, it's the main rule there, the law is to invest just within the country.
Yes.
And there's still a lot of opportunities outside Luzon. So
okay.
So there's definitely a lot of upside there, right? So I think that's what they will go for. So
okay, still some projects there and people still going to the malls so they can still build more. Let's talk about PLDT. They've been said that this was actually reported already last week to weigh a data center stake after that spending overrun. Just a question on that overrun issue. Has that been completely priced in, and have they, it doesn't seem that they've gone back to the, let's say, pre-overrun levels. Why is that when the bottom line should, as they claim, should not necessarily be affected, if this is just a depreciation issue? Give us more on understanding of how to treat this stock after this issue.
That's a good thing to bring up. In terms of has the issue been priced in, I think it has been priced in already. Hopefully, there are no surprises here in terms of news. But I think it's more of the sector overview now, the sector related headwinds, right? If you take a look at the competition is still tight, right?
Right.
If you take a look at the mobile, in terms of regulation, diba? The mobile number portability law, the SIM registration, it leans towards the ease of shifting from PLDT to Globe or to Dito. So that's competition right there. So that the landscape in the telco sector is still tight competition. So that has been reflected in the share price. So in terms of margins, diba, where do you go for margin? Will your gross profit margin be higher than inflation? That's the question, because in the telco sector, margins are really tight right now.
Is this going to be looked at well if the data centers, which of course are their core business, will be sold?
Yeah, that's a good question, because that will be cash for them. We're actually seeing a lot of opportunities for them to raise cash via selling their towers, right? But at the end of the day, investors will take a look at their core businesses in terms of the mobile, the home broadband, and how it fares as compared to the other competitors.
Okay, so very tight competition in the telco space. Let's move on to another stock, quite related actually, but MPIC, from rumors of a delisting, entry of private equity investors, agri-space, and then a possible IPO na naman of the hospital group, which was already being explored, and then they stopped that because of the entry of KKR and GIC. Give us an idea of how to treat this stock as a holding company and with all of these issues surrounding it.
I think for MPI, I think we agree with their main goal of prior to the pandemic. Their main goal was to really solve their debt, right? So
okay,
that's a good strategy. Right now, they're targeting to IPO this hospital business in an environment right now where a lot of investors are looking for stability. I think this is a good idea in terms of doing an IPO on hospitals, but we have to consider that there are a lot of companies doing an IPO right now. So it's more on competing now for investors, right? So there's definitely opportunity for this name, but I think timing is important also. Timing is vital, because at the end of the day, while the company is robust in terms of earnings or prospects, if investors don't have a lot of cash right now because they've already invested in the prior IPOs, that will be an issue also. So timing is important also for IPOs.
Theoretically, it seems to be a way for the private equity investors to have their exit. Looking at the stock, at least in the past 5 years, wherein the period wherein they did enter, will they gain, some upside or return on their investment, or will the people that had invested in the stock get a return on investment should they IPO?
That's a good question, because right now, if you take a look at MPI in the past years, one of the story is consistent there that MPI has been undervalued, right? Trading way below their book value. But to answer your question, I think
why is that, Royce?
I think it's more on, I think usually holding companies, what investors like about holding companies is it's less is more, right? For example, for MPI, there's Meralco there. People opt to just invest in Meralco directly. Right? So for MPI, the play there is Tollways, the other segments, right? But bulk of its earnings still comes from energy and water. So, and I think another issue there is regulatory. The industry that involved with are heavy with regulatory, and foreign investors are not so keen with that. So while here as a local, I understand the opportunity that MPI provides in terms of earnings both prospect. For foreign investors, it's quite a different story. They can easily opt for other companies, right, that are safer for to invest. So to answer your question, I think it's vital now that the rumors that has been surrounding whether the company will delist or not, right? Then the tender offer price is paramount for these investors to at least gain profit from their long-term investment with MPI. Of course, should they conduct a tender offer. So that's the key right now. But right now, at current levels, not much profit there. So,
at the moment. Okay, but very interesting to see how this will be priced if that does come to fruition. MPIC trading at 4 pesos and 3 centavos. Thank you so much, Royce Aguilar, First Metro Securities.
thank you, Danny. Take care.
And for more updates, visit News 5, the Philippine Star, and Business World Online, or visit our website, onenews.ph. For more in-depth analysis, you can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com, and stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.